Hi everyone, welcome to my channel. I'm Doris. I'm here to share with you about my stock account and today's market updates. Today my stock account has a net asset of $69,931.06. Today Apple has closed down 0.85% to $195.89 per share, and SKQ has closed down 2.25% to 13.39, and SPY has closed up 0.56% to 471.97. On the other hand, United Natural Gas has rebounded for 1.2% to 4.89. Today, the industry generally performed well. Dow Jones Industrial Average closed up with 0.00% fluctuation. Nasdaq has closed up 0.62%, and S&P 500 has also closed up 0.45%. Today, the internet content led by Google has closed up 2.4%, leading with a gain in the market. So, let's talk about the U.S. Federal Reserve's monetary policy today. Last week's interruptive announcement of the dovish stance that the Fed takes was surprising to many Wall Street investors, and that abandoned their prediction for a rather dovish prediction for 2024 monetary policy. However, there are still divergences between the bulls and bears. The pessimistic forecast for the next year's bond market, released in November, is not unattainable, as bond yields fell sharply after the Fed pivoted to cut interest rates in the next year. Some of the already optimistic voices were also completely diluted by the incident. However, while many banks have been forced to rework their plans, the major banks remain divided. TD Securities is one of the most bullish companies on bonds, and the Bank of America and Barclays are the most skeptical. The median forecast of the strategists at world's largest financial institutions is that the yield on the 10-year Treasury note, which is a benchmark for many markets, will fall to 3.98%. That's a far cry from Monday's close of 3.93%, but significantly below the 4.2% level before the Fed adjusted its strategy. And yields are also below the 2.23 highs of more than 5%. TD Securities believes that the 10-year Treasury rate could fall to 3% year-on-year after a year after the Fed began to cut interest rates by 200 basis points in May. Goldman Sachs Group and Barclays, while abandoning the view that the rate cut is unlikely before the fourth quarter of next year, expect the yields of 4% and 4.35% respectively at the end of 2024. Bryce Doty, who manages a $9 billion government bond fund at Sid Investment Associates, his team said, "When you look at the different ranges of estimates, you know that a trend is over and you're about to start a new one." Doughty adds that the Fed's dovish pivot is a wake-up call to tell you that we are at a turning point. Other institutions, such as Bank of America, still expect the 10-year Treasury yield to reach 4.25% this time next year, but still acknowledges that the Fed's new stance poses downside risk to our interest rate forecast. Morgan Stanley's forecast is 3.95%, JP Morgan's forecast is 3.65%, and Citi's forecast is 3.9%. At the same time, today Google has closed up due to its parent company Alphabet signing a $700 million policy to revise its Google Play policy to fight in negotiation with government agencies to defend its antitrust allegations. As we all know that from Google's Play Google Play's application market, it for the profits that the developer makes from the certain application, the Google Play will use its channel to take out as most as 30% of its profit, and it has been accused of taking advantage of monopoly. So the latest settlement with the government promises a mutual fund worth about $630 million to benefit U.S. consumers, and a claims fund worth about $70 million. Late Monday Eastern Time, the agreement disclosed in a court filing requires Google to adjust Google Play's policy aimed at reducing barriers to competition in the mobile app distribution and payment processing markets. The lawsuit, which converged in federal court in California, threatens $1 billion revenue generated by Google's parent company Alphabet in the sale and distribution of apps through Google Play. Wilson White, Google's Vice President of Government Affairs and Public Policy, said in a statement, "This settlement builds on Android's choice and flexibility, maintains strong security protections, preserves Google's ability to compete with other OS makers, and invest in the Android ecosystem for users and developers." Google's parent company, Alphabet, said in the settlement that it would allow investors of its Play Store app to offer users a direct payment option, the latest move by Google in response to increase the regulatory scrutiny in the US. This is all I have for today. Thank you for listening. Don't forget to subscribe and see you next episode.